Hi, and welcome to today's edition of Market Analysis. For today, the 16th of November, I'm Giovanni Betancourt, analyst, trader, and educator with Vantage Markets. The market can rally without communication and technology. It's happened before. The seasonality rally came right on time this year as earnings season has been better than expected from an aggregate standpoint. Although every mega cap name flashed some warning signs of an economic slowdown, the broader market held up quite well. Economic data, on the other hand, has been mixed to lend credence to the Fed's slowing or pivoting from its current trajectory. But the market has interpreted last week's CPI report as the ultimate sign the Fed may be close to the end of its hiking policy. That is something we can debate on another day. If you're in that camp, then it's time to get tactical. The active manager, investor, or trader will become the rock stars of Wall Street once again after years of underperformance to passive managers. We may be starting a broader sector rotation, adjusting market share from traditionally strong sectors of the last 15 years to some of the forgotten sectors that have been left for dead. For example, the notion that the market cannot make new highs without technology and communication may be factually inaccurate. Both sectors comprise almost 40% of the total market share in the S&P 500 when the market peaked in late December of last year. But now, both sectors comprise 33.8% of market share as communication services has lost over 30% of market impact in the last year. The energy sector has done the opposite. It has been on an upward trajectory, doubling its weight within the S&P 500. Healthcare also has commanded some attention as inflows into the sector continue to rise at a faster than average pace. Now, talking a little bit more about the energy sector, keep in mind that next month, starting December 5th, new restrictions are going to start happening on Russian petroleum. All right, so this obviously will have an impact on supply, demand being high, and China looking to come out of all of these COVID lockdowns. So its economy is going to come back online. So there, the demand will increment. So if we take out of offline the about 2 million barrels per day that Russian petroleum was accounted for, then we perhaps could see a spike in petroleum in the energy market, may bring in perhaps crude oil to 120. That's not far-fetched. Now, going back to the subject at hand, the sector rotation is beginning to look very similar to the market composition we saw in the bear market of 2002. Now, if we continue to see stocks rebound after this seasonality rally, which typically ends after the second week of December, then we may confirm that a solid rotation may be taking place. Just keep in mind, technicals provide traders guidance, but valuation factors give long-term institutional investors confidence. And with that being said, let's take a look at what we can expect to see in today's markets. This is the NASDAQ in front of us. I'm looking at the NASDAQ to continue, even though it has been, yes, all 3 days has been on a positive upbeat. We are still waiting for confirmation of a trend change by setting in a second consecutive higher high and higher lows. And that will be done once we are able to close above this resistance level, which is the high of September 21st. If we are able to close today above this, this will mark our second consecutive higher high. Now, technically speaking, that will mean that we are in an uptrend, the beginning of an uptrend. Okay, so that could be something for traders to take to consider and take a look at. However, if that's not the case, then another attempt to take out the October 13th could be in place. Now the 10,500, but we are pretty far away from that. But right now, what I'm looking at the market to do is to consolidate around my pivot point right below the 12,000 mark and just stay here homing for the rest of the week. If I dare say that. Now, obviously, could we see an increment or push to the upside when Target comes out and reports today? We could probably see that, or we could probably see also, a drop come out and take a, come back down to our support around 11,500. That obviously could be the case, but initially, I'm looking at the market to just do the same, looking to make another attempt to close above the high of October 21st, so around 12,200, roundish. Then we have S&P 500. So here we have the S&P 500 really as the same. The 4,000 marker is really a resistance level, psychological resistance level that we obviously need to come and close above that for us to say that we are entering a changing direction in trend. So that should be kept in mind. RSI is really far from being overbought and overbought scenario of levels. So keep in mind that we could probably make another attempt at 39.50, find support, and see if we can make another attempt to break 4,000 and close above it. Okay, so that's what we could expect. Then we have crude oil inventories coming out. So we could probably expect some volatility in the market. Let's see if that will be the case. $84 is the support that I have for it. It has held quite well. It has created a double bottom here. So will it hold if the market comes down towards it? RSI is below 50. So perhaps it'll come out to test it and then rebound again towards the 86 marker. Then we have Nat Gas. I'm looking at Nat Gas to really continue this consolidation stage between 550 and 620. Then we have gold. Gold also, the 1800 marker, the resistance hasn't been even touched. RSI is nearly inside the overbought territory, so that could bring some pressure down for the market to come down and towards a pivot and see if it'll find some support here and make another attempt at 1800. Then we have silver. Silver is in a tight range of 50 cents, 21.50 underneath 22. You could probably continue to bounce in that channel. Then we have copper. Copper also is retracing from that high. Has brandly broken that 380 psychological support. Looking to come down to 375, where I have my support to see if it'll find support and then make another attempt at reaching $4. But I think that will not be the case. I'm thinking that copper will linger above 375, below 3.85. Then we have Bitcoin. Bitcoin also being quiet, trying to stay afloat after such a chaotic week from FTX. Then we have the euro, which is also looking to stay above 103, below 105 is the resistance that I have for it. And the pound, 118, is really the resistance for it. 118 is the support for it. 120 will be the resistance. As far as Mr. Dollar Index goes, well, another attempt at 105 could obviously bring a lot of the currencies higher, the euro, pound, gold, silver. Okay, so let's see if that will happen, or will stay also above 106, which is also another psychological support level. Well, that's it for me right now. Have a fantastic trading day, and I'll see you tomorrow.